Okay, so this is part two. So let's just go back up a bit and just discuss the things we expect to see in this sales ledger control account. If I just change my pen color again back to, here we are. Let's just go up here, back to red. Now, if you've sold goods on credit, well, I'm hoping you're thinking, I should get some money. And in exactly the same way, here's your cash book. And in your cash book, you have, if you like, debit and credit side. We just call it debit and credit side. It's still a subsidiary book, so it's not quite yet double entry. I mean, for now, we will just argue that it's purely a list that just looks as built in a T account format. And every time, so you could really just have a customer schedule or a heading customer, and you could have and let's say you say you've only gotten money from A and B, and let's say you've got 50 and you've got 115. So the total is 200. So you've received 200. So if you've received 200, you're saying one A has gone up and another A has gone down. So as far as the double entry is concerned, what we're really saying here is that we have received in the bank, if I was to create the double entry of bank, I would have 200 here and 200 here. Totals again. But this 200, of course, is made up of 50 and 150. Now, so just keep a note of all the things that are going into this sales ledger control account. That's the actual credit sale. That's money coming in. You're happy with the fact that an opening balance, of course, will be a debit. It's an asset, isn't it? So, I mean, I'll do a little example over here. So if I had if I sold some goods on credit for 500 and I received 300, well, my closing carried down will be 200, which means that my opening balance will always be 200. Your opening balance on ledger control accounts, sales ledger control accounts are always, if you like, on the debit side. So now I have this opening balance, I have this credit sale, I received this amount of money. Then let's just look at what happens here. Let's just go back to my day book. What else could happen? Customer might return some goods to me. If customer's not happy with goods and he returns, say, 80 pounds, and they say B returns 80 and C returns 50, so that's 130 pounds worth of goods coming back. So I have a total of 130. What happens with that 130? If you remember with your double entry, what happens is you open up a sales returns. So you have 130 coming in, 130 here, 130 here. Of course, that 130, remember this thing here, this sales ledger totals count, is just a total of this. It's a breakup. This is a breakup of this. That 130 is broken up into 80 and 50, 80 and 50. So you can see that this is pretty much the total of this thing over here. And then what else could potentially happen? Well, I think that's kind of it for this, for these three books for now. The things that next happen kind of happen in the general journal. When I say happen, we record in the general journal. So, for example, one of your customers goes bad. You have a bad debt, irrecoverable debt. So what do we do in general journal? We write debit irrecoverable debt. Let's say C has gone bankrupt. So C currently owes us 300. They sent back 50 pounds worth of goods. They don't owe us any more money. They've gone bad. So we have 250 here, and we credit, of course, the sales ledger control account. It's gone. You're never going to get that money back. So what do we have here? We open a bad debt account or irrecoverable debts, 250, and we have 250 over here. This 250 is made up of this C, and that's 250. This is gone. You can see straight away. So what am I saying? Opening balance, credit sales, money coming in, of course, sales returns, bad debt or irrecoverable debt. Something else I've left out, unfortunately, forgive me, is the discount. So you could have received, when you were receiving money from a customer, you might have said to them, just give me less than what you actually owe me. So for example, let's see who still owes us money. We have A. So A decides to clear their debts. A currently owes us 100, so we say give us 30 pounds, and then I'm just going to chuck in another 30 here. And A decides to give us 30, and we give them a discount of 20. So you record the discount just in a line here. So you have discounts allowed, 20, it's an expense, and you have given discounts because you have also received 30. I mean, that's the 20 and 30 here. So let's go to a clean page, just because, I mean, you're studying this. This is just a booster. So we have a sales ledger control account, and what do you have? You have your opening balance, X. You have your credit sales, X. Then you receive money, of course, X. You have discounts allowed, X. Sales returns, X. Irrecoverable debts, X. And that's your classic fill-in. There is one thing called a contra, and why not? Let me discuss it now. I was going to make a new video for that, but there's no need to do that. So, say for example, you have a scenario where you owe. Sorry, I just want to go down. Let's go new page. So, say for example, you have a scenario where let's just take two people in the class. We have James and we have Shannon. So James sells goods to Shannon, but James also buys goods from Shannon. So here's Shannon, and here's Shannon. So here's Shannon as a trade receivable, or as part of his sales ledger control account, and this is Shannon as a trade payable, who he also buys goods from. So James sells goods to her, and he sells goods to her. So this is income or revenue. He sells goods to her with £3,000. So Shannon owes him £3,000. But James also buys goods from Shannon. So we have purchases, £2,000, and he owes her £2,000. So if we look at what's going on here, I mean, this could be my sales. If Shannon was his only customer, that would be his sales ledger control account. Well, if she owes him $3,000 and he owes her $2,000, well, they just could come to an agreement that, listen, you know what? Let's just contra or kind of close out our debts. You just, if you forgive me for what I owe you, I'll forgive you for what you owe you. Well, only up to the amount, of course. So we have 2,000 here, and we have 2,000 here. So we call this, if you like, contra. This is a contra. So now Shannon owes James just, if you like, when we do the carry down, we'll have 1,000. She owes him £1,000. Shannon owes James, and then the rest is and that's it. So you can see the contra, of course, sits on the opposite side of either account, right? So taking us back to the previous untitled page, the contra is pretty much what would end this this scenario, and that is your sales ledger control account. So you can also see why it's very possible for both to be in disagreement. It's very possible for the sales ledger control account. This is, like I say again, a copy of every single thing that's happening in the individual accounts in the sales ledger, right? This is literally the same thing, just broken down. So your question will always tell you, oh, there's something's been written here, it's not been written here. I mean, when we're doing the exam kit, we'll do that. But this is a booster, so this is to inspire you to go back and look in the textbook and do those questions, not necessarily to always go through 4 questions. Okay, great stuff. And repeat this for the purchase ledger control account. Exactly the same thing. It's a good process. It's good practice for you to do that. Okay, great stuff. See you in the next chapter.